The 20th Party Congress taking place in Beijing this week will set the political and economic tone for China over the next 5 years. For more than 2 decades, a new Secretary General has been chosen at every other Congress. But this year, the leaders are expected to break that tradition and appoint Xi Jinping for a third term. His grip on power and increasingly nationalistic tone has massive implications for the world economy. I spoke with Victor Shih, professor at the University of California, San Diego, and author of 2 books on China, to get his thoughts on how Xi plans to revive the Chinese economy. Welcome, Victor. Thanks for being with us.
Thanks for having me, Maggie.
So the Party Congress is underway as we tape this. What are your early reactions to some of what we're hearing?
Yeah, so I think, interestingly, although, a lot of Western observers will not read it as such, but if you read Xi Jinping's speech a couple nights ago, it was really kind of a celebratory speech, celebrating the many accomplishments of the Xi Jinping administration in the past decade. In terms of imposing stricter ideological control over China's society and cultural realm, in terms of reorganizing the People's Liberation Army so that it has greater fighting ability, and also in terms of promoting economic growth. And the portrayal of China's dealing with COVID is that it has been a great success. That the Chinese government has imposed zero COVID policies that has saved the lives of many people, and that it should be celebrated as a success. So it was very celebratory, and at the same time, not too many new things on the agenda. There are, of course, 2 versions of the speeches, and Xi Jinping read the shorter version. There's a longer version. I just got finished reading the longer version. And really, there's not much new there compared to the last speech 5 years ago.
It's interesting that the tone is celebratory. I mean, I think while we may not read it that way, everyone understands politicians tooting their own horn, saying how great it is under them. But we know that certainly not everyone agrees. I mean, there were protest banners unveiled from an overpass, very unusual, granted, not something you see very often, that they were saying no to lockdown, yes to freedom, go on strike, remove the dictator. I mean, they were quickly removed, and one, fears for what happens to the people who get caught who put them up. But, is there some social unrest brewing underneath the surface that Xi might be considering when he thinks about what he's going to do with COVID policies moving forward?
There's certainly a lot of dissatisfaction. There's a lot of unhappiness, and there's also a lot of economic stress. Frankly, people are losing the jobs. 20% of young people are unemployed. But nonetheless, the degree of surveillance, the degree of social control is so overwhelming that for the vast majority of people, in urban China at least, it becomes extremely difficult to organize in any sizable protests. We did see one person, a very brave person, unveil this pretty sizable banner criticizing the government, criticizing Xi Jinping himself, actually calling for him to step down from power. A very shocking event, to be sure. But then, of course, the security in Beijing just got tripled. And so it becomes extremely difficult, if not impossible, to engage in similar kinds of protests, certainly in Beijing and even in most of the major cities of China, where I think a lot of the social tension may boil up to the surface is in smaller cities and in rural China. The fiscal situation at the local level is actually quite stressed at this point. Because of zero COVID policy, because of slowing down in the global economy, you see the vast majority of local governments running huge deficits. The central transfer payments from the central government are no longer sufficient to cover local expenditures. So they've had to issue more debt. And now, definitely we're at the local level, at least, the Chinese government is certainly in the Ponzi phase, where payment of interest in outstanding debt has to be financed by new issuance of debt. But of course, because all this debt issuance is organized and guaranteed by the central government, everything has proceeded pretty in an orderly manner. But you do see the fiscal stress, popping up here and there. There are these projects, or when financial institutions get in trouble, no one wants to pay for recapitalizing them, repaying the investors. The central government doesn't want to do it. Local governments, they don't have the resources. So you've seen these protests in some cases, and it becomes like this kind of staring contest between the local and the central government until someone ponies up the money. So this kind of stress is emerging at the local level.
It's interesting because you're not the first person who's brought up the sort of tensions between the local governments and the central government. That seems like, it's potentially important. Is there, what impact will that have on the political support for Xi? Because, as you say, the individual person is incapable of expressing dissent because of the level of surveillance. But what about in political circles? Is this something that he needs to be concerned about? And what does that do to the economy? I mean, it seems like it would be handcuffs on the economy's ability to grow.
Yeah. The manifestation of that is in the property market. So China had this, I wouldn't call it virtuous cycle, but at least a workable kind of system where the central government and the local governments jointly financed infrastructure projects. And then that will infuse some money in the local economy, allowing some people in the localities to buy the properties that are often developed as part of these infrastructure projects. But now, the flow of money has slowed down from the central government. Well, actually, most recently that has accelerated a little bit as they try to goose up growth a little bit. But the problem is that, local governments used to step in with paying for part of these projects, and they just don't have the ability to do that anymore. And so it's slowing down. The pace of investment is slowing down. And then moreover, buyers at the local level, either they're unable to or unwilling to buy yet another empty apartment, in which in many cases they're not even collecting any rent from. Hoping for an appreciation. I think the psychology, kind of has broken. Not in all the cities of China, but certainly Beijing, Shanghai, Shenzhen, they're doing fine. People still want to buy apartments there, but in some of the second tier and especially many of the third tier cities, sentiment has broken. People take a look at the demographics. In many of these places in Western and Northeastern China, population is rapidly shrinking. If you buy yet another empty apartment, who's going to buy it from you, at the end of the day, and how are you going to get the equity gains there? And so without this kind of cash flows from property buyers, local governments can't finance their part of these infrastructure projects. The central government already, is facing pretty large deficits. And then they really don't want to increase their deficits more than necessary. So I think there is some pretty serious growth headwinds. I mean, so Xi Jinping has kind of gotten around that. It looks like he's like, but we want higher quality growth. So the absolute amount of growth is no longer as important. They've been saying that for a couple of years, but I think before they had some room to actually surprise on the upside. These days, unless the Fed reverses course and starts lowering rate, the chance of a growth upside surprise is really not there anymore.
So she talked about we always try to look through this, and obviously, we'll see what else comes out during the week. But as sort of an indication of what the priorities are going to be, where that government money might go to in the economy, sectors they see leading. Talked about information technology, artificial intelligence, new energy as engines of growth. What will that mean in terms of where the investment might go, and can they grow those areas?
Yeah,
So just domestically or without foreign capital?
Yeah, that's right. So to finish the thought that we started earlier, I mean, that's where a lot of the state initiatives will take place, because the previous model of putting a lot of money into a state-owned fund, but then the fund will then invest in these private funds. That's going to be shrunken because of the corruption, and then even though they still exist, the pace of investment will be dramatically slower. For the Chinese government, I think they will be a lot more comfortable. So Tsinghua University, for example, it is a state-owned entity, education entity. If there's a brilliant computer scientist or something like that at Tsinghua, and actually, I know personally a few cases, the Chinese government have been willing to just give them enormous amount of research funding to build up brand new research institute from nothing, really. So in the space of a few years, they can go and hire a bunch of postdocs and faculty members and do the research that they need to do. So this kind of state-sponsored research in state institutions, that is really going to take off. And it has been taking off, actually, for the past 5 years or so. We'll see a lot more of that. So the question is like, well, is that going to help China achieve some of their objectives? I'm not a big technology specialist, but I think in some fields it will. It will succeed in sort of giving China the cutting edge, bringing China up to the cutting edge level and maybe even surpass that of the United States in some fields. In other fields, they're probably not going to work very well. It's like autonomous driving, for example, something like that. I mean, I just don't see, even in the US, with a lot of private sector money, with tons and tons of experiments and road tests and all this kind of stuff, we haven't cracked it. I think for China, if they don't rely on the private sector, it's going to be incredibly hard. But for some other things,
Yeah.
it will work.
Yeah. It's interesting because you could see the tension between what you're describing, because in some ways, when I'm listening to you, I'm thinking, oh, this, state-driven funding. I mean, nobody can play a long game and invest billions like the Chinese government, presumably, without the pressure of quarter-to-quarter shareholder or VCs wanting an exit for their money. So you can see how that would be a really powerful force, especially when you're talking about cutting-edge technology. On the other side, though, if you don't have entrepreneurs who can, get rich off their great idea, and you've got the Communist Party tentacles through everything, and all the bureaucracy and potential corruption that comes from that, and sort of picking the winners. Maybe people don't have the expertise sort of deciding where that money goes. You can also see how that could be a real, sink and weight around any kind of innovation. It seems like there's a lot of tension between those two possibilities.
Yeah, there's definitely tension, and then that again, will prevent some technologies from taking off in China. But then in other fields, I mean, they've done very well. In artificial intelligence, they seem to, because of the large amount of data that's available, and also because a lot of these algorithms have not been protected at all. They just get posted on GitHub and stuff like that. So I think artificial intelligence, I'm not a huge expert in it, but it seems to me, for code, it's just very hard to protect, because the coding community is a global community, and a lot of stuff just gets shared, online. So for things like that, I think given the amount of state funding that is available to top computer scientists in China, and that within the system, there is still, a lot of incentives to get people to innovate. It's not always the $1 billion payday. I mean, sometimes people just for prestige, for whatever other reasons, they want to engage in research. I mean, as an academic, I know about that. And for some fields, that's enough, of an incentive. You don't need to, not everyone has to walk away with $1 billion payday with an IPO. They still will innovate. So yeah, I think it'll be interesting. For some of the more capital intensive stuff, a lot of these military industrial firms will take over the research, and they've had mixed success. I mean, some of the things, and to the extent that they don't have cutting edge technologies, they make up for it with large numbers. Like for satellite.
Hi, I'm Raoul Pal, the CEO and co-founder of Real Vision. The financial world is a complicated world right now. It's a really complicated macro picture, and there's a lot of risks. Real Vision and our YouTube channel help you navigate those risks. So subscribe now to the channel and never miss an update. There is simply too much going on. So subscribe now. Thank you.
That's a great point. And we always have to challenge ourselves not to put a sort of, Western capitalist view on this, which is why, I tend to ask, can that work? Can this new model work? There's not a lot of history for it, but we do tend to think that, there has to be a payday. And obviously Xi is trying to create a different system where the rewards look different than maybe what had been in the past. You mentioned the military industrial complex. What's the probability of an invasion of Taiwan? I mean, we've certainly heard the rhetoric going up.
Oh yeah, if I knew that, then I'd be rich. But well, so it is a very hard problem that's really hard to think about because in political science we typically study sort of political motivations for war. It's like, if a leader is losing control, losing popular votes, then they would launch some kind of war in order to boost popular support, the rally around the flag kind of phenomenon. Xi Jinping doesn't need any of that. He has complete control over the party, over the military. So there's no political motivation, and even if, let's say, at a very extreme scenario, I don't believe the United States will ever do that. It's like if the US were to recognize Taiwan or something like that, we wouldn't see massive protests on the streets of Beijing because, the police is very effective. There's total surveillance and no one will talk about it. It would just be a non-event in a sense. And at the same time, an invasion would be extremely risky undertaking. But we also cannot conclude that he will never do it. Even though we're like, oh, but it's so irrational. Why would he take such a big risk at no obvious political gains to himself? What we don't know is how much he intrinsically wants it. If he really has consolidated control of the party, the military, modernized the military so that he can unify China, so to speak, then nothing will stop him from doing it. Fortunately for now, the signal is that the Chinese government would still like to resolve this peacefully. So this was emphasized in the speech a couple nights ago. But at the end of the day, we just don't know, how much he wants it, and if he wants it very badly, what are the conditions that will cause him to pull the trigger? I suspect one potential trigger is in 2024, if the US political system lapses in some kind of election-related chaos and it doesn't seem like anyone's in charge, riots everywhere, etc., China might see that as a good opportunity.
Wow, that's a really honest and terrifying answer when it comes to both China and the U.S. But it makes a lot of sense, and sort of getting inside the mind of how badly he wants it definitely has echoes of what's happening with Russia right now, where people really miscalculated Putin's desire to.
It's so irrational. But he did it because that's what he wants, right? And there's some kind of game theory research. It's like, well, why do people keep supporting these madmen? It's like, well, because these madmen, they're mad. They don't care about self-interest. So usually it's actually beneficial to make an alliance with them because like things that you typically want, money and like control over this, like they don't want that. They don't care about stuff like that. But because they're mad, they want truly insane things that one day everyone who went along with them will have to go along with their mad agendas. So this is kind of what we're seeing in Russia and hopefully not China. I do have to say for Xi Jinping, he has shown himself to be a very careful and actually conservative decision maker across the board. So he's taken some big gambles and, in terms of going after senior generals in the military, but in terms of policy making, he has not deviated from the status quo by that much.
But it's interesting because you say that as we're watching the biggest consolidation of power
Yeah.
unprecedented, not unprecedented, but, breaking the tradition of 20 years, handing over. So not transitioning power. So in some ways, he's not conservative at all. And yet he's very calculated in terms of how he's gone about it.
Right. Yeah. So he achieved some, pretty unprecedented things, but I think it's on the basis of knowing that he can succeed in these things. Right. So he had a lot of support in the military. So he knew he could go after some of these very corrupt generals and still win the fight. By the time he changed the constitution, he had eradicated most of his potential challengers from the party. And so when he changed the constitution, really no one had the capacity to push back against him. But invading Taiwan, with the uncertainty of whether the US and maybe even Japan would intervene, that's a totally different thing.
Talk to me a little bit about the level of state surveillance. First of all, do you think they'll roll back COVID? And if not, even if they do, can they roll back COVID, and will they still hang on to the level of surveillance? That seems like it might be here to stay.
Yeah, the surveillance is here to stay. I mean, once these apps get installed, there's a new one actually my students told me about. Apparently I think it's all college students and young people. I don't know how old, up to what level, but all the students, they have to install this app. It's an app against financial fraud. So, when you're in China, whatever cell phone you have, you start getting these text messages saying that, oh, if you want to make $1 billion or whatever, call this number. It's just very common. And this app will automatically delete these messages from your phone. And also, if you get a call from a fraudulent person, it will immediately send you a text saying that, oh, the person who just called you is a fraudster. Don't listen to him or her. If you think about it, an app that can do that means an app that knows everything that you're doing with your phone. It's extremely intrusive. But then, of course, everyone's like, oh, yeah, sure, this is great. I don't want to be the victim of fraud. So, already they installed the COVID app, which, tracks their location very precisely. And now you have this financial fraud app, which can, presumably using artificial intelligence, determine whether, texts and even phone calls you're receiving are from fraudsters. But presumably it can also classify other kinds of messages and calls,
Absolutely,
from whatever. The level of intrusion is just unbelievable. It's extremely, extremely high. Is COVID policies going to relax? Not in the immediate future. The speech celebrated the achievements of zero COVID. There was a document that was released by the party late last year saying that zero COVID, was a historical achievement. So given that, the pretty heavy emphasis put on the achievements of zero COVID, I think it will be here to stay for the next few months at least.
Will the general population just accept that that level of surveillance and the crackdowns that come with it for the foreseeable future, or will that ultimately be the seeds of some sort of unrest?
It's very hard to imagine like a spontaneous uprising. So there's now a meme or like a trend among younger people. It's called running. And it is just what it sounds like, like young people say, well, if we just can't take it in China anymore, we'll just leave, try to leave as much as possible. And there are all these like websites setting up and say, oh, well, this is the best way to like move to Europe, and just live there forever, or like come to the US. And it's becoming a big social trend.
Wow. So a brain drain out of China at a time when it needs its demographics and young people more than ever. But presumably the leadership won't let that happen.
It's allowing it to happen so far. Because ultimately, only people with money can leave, to be honest. And so the vast majority, even in the middle class, only the upper segment of the middle class has that capacity to leave. And then, even the middle class, they can't leave. It's very expensive, because you either try to study overseas, very expensive. And then for people who want to be investor migrants, even more expensive. You need hundreds of thousands of dollars, and most people just don't have that.
Xi talked about promoting integration between the real and digital sectors of the economy, right? In other countries like India, that's seen as a real opportunity for growth, of course, with questions about things like surveillance. But investors look at rapid growth in fintech and health delivery and, generally looking at some ability to, upgrade growth and the quality of life for especially some of its poorest, again, with caveats. In China, is there that potential for innovation and growth, or does it just look like a different version of state surveillance?
So in healthcare, there's certainly a lot of initiatives, both private and government, to try to ramp up virtual healthcare. They even have this thing called virtual elderly care. I really dread to try to figure out, how that works.
Robots taking care of you.
Or like basically surveillance, and if it seems like something's going wrong, then hopefully a real person shows up and take care of things, something like that. So it sounds like the government is going to support those kinds of initiatives as they try to. But at the end of the day, it's really an attempt to deliver more care to people, but without really spending that much more money.
Right,
that, of course, is the objective of, everyone, for-profit care and all that. But in China, I think the government especially is running into some very hard budget constraints. So if they do want to improve the quality of care, it will have to be through these technological shortcuts. That's why they're very supportive of them.
Well, what do you think Xi's biggest challenge is when it comes to the economy?
I really think the high level of debt is a huge problem, because even if he woke up tomorrow, and there's some signs in the speech, it's like, oh, we need to expand domestic demand. He wants to do domestic demand side stimulus. Really, his ability to do that is very limited, because you have total debt, non-financial debt in China, over 300% of GDP. Much of it owed by government-related entities. Because households owe roughly 70% of GDP in debt. The rest of it, there's like private sector debt, that's maybe 30, 40% of GDP, but the rest of it, which is kind of almost 200% of GDP, is either owed by local governments, local government financing vehicles, SOEs, or the central government. And so if they were to, kind of do what we did in 2020, issue sort of 20, 30% of GDP in debt. So remember, rates are high now. Their interest payments are just going to blow up even more. And the pressure for capital outflows are just going to be even stronger. Because right now, actually, interestingly, US bond yields, like 10-year, let's say, is higher than Chinese bond yields. So there is a negative carry. And people now have really strong incentives to try to move money out of China. And they're doing that. The foreign exchange reserve is getting diminished. So it's really not, the one big advantage of China is that it continues to be an industrial powerhouse, huge export, huge trade surplus. But even with this kind of high trade surplus, the foreign exchange reserve is losing money, and quite a bit of it. Actually, they had this kind of side cushion, and Mike Pettis and I were talking about on Twitter, roughly $200 billion in a side cushions stored in the state banks. All that is gone now, and then the official reserves itself also dropped by $200 billion. If it goes below 3 trillion, is purely psychological. It doesn't really matter. But if it drops below 3 trillion, I think downward pressure is going to intensify. The psychological pressure is going to intensify. They're now doing all these like weird swaps and this kind of stuff, which is in the short term, it works. But if the outflows pressure were to continue, basically that's not going to work very well, because soon your forwards are going to build up into very sizable, and once investors discover the exact size of it, the full-on panic ensues, and it's really not going to be good. So there's a lot of worries there. The high deficits, the vulnerability from outflows, potential outflows. Those, I think, economically, those are the biggest worries.
What do you expect them to do with their currency?
Well, so they've been doing this kind of soft float, but it's within its range bound, right? And they've hit the kind of lower end of the range. So yeah, no, I think the PBOC is really stuck in a place where they have to decide whether to enlarge the range. But if you keep enlarging the range, then because the whole point of having some kind of range is say, oh, you don't want to build up expectation of like too much depreciation too fast. But if you end up doing that anyway, then the expectation is going to build up. So I think, yeah, it is kind of a dilemma for them. And they're hoping and praying for, lower inflation in the U.S., which hopefully will turn the Fed around at some point. But this is, is affecting every country on earth, basically. But for China, because of its large foreign exchange reserve, because of the fact that it has run pretty large trade surpluses, they haven't really had to worry about it too much. Well, I mean, there was a huge episode in 2015, but since then, things have stabilized. But now, the music has stopped again, and they have to worry about this yet again.
Can China get through this period without seeing a major crisis? I mean, it sounds like there's a lot of pressure building in different areas, whether it's between local and central governments, the high level of debt, the sort of transition to state control. Can they get through this without there being a major?
I think at the end of the day, they can, if they shut themselves off even more so from the world economy, especially from the global financial system. Right now, the big connection is Hong Kong. I mean, despite everything, Hong Kong continues to be a major bridge between the Chinese financial system and the global one. They can always shut it down. And if they shut it down, then it's fine. I mean, basically, people just can't take money out of China at all. And then they will do this thing where they limit the number of students who can travel overseas, the number of tourists who can travel overseas, et cetera, et cetera. I mean, we hope it doesn't get to that point. Obviously, we like having our students from China, coming, studying with us and paying tuition, et cetera. But it could come to that. If the outflows are too, because I think the alternative, which is kind of a clean float and, open up the capital account, the cost of that is just too high for China, because basically you will have this kind of 30+% depreciation overnight. And then the problem with that is the dollar value of China's economy also shrinks by 30%. And China will never catch up with the United States, which for Xi Jinping, that's unacceptable. So I think for him, he would rather have kind of a closed system that he can claim is like, oh, but we're getting more powerful, we're getting richer, even though the accounting of it is very suspect because, it's completely closed loop. But he's fine with that, actually.
It sounds like he's fine with it, but that a very cautionary tale for any investor who has been putting money to work in China or is thinking about it in the future. It sounds like that era is over.
Yeah, I mean, especially right now, you have higher U.S. rates than China. It's like, why would you buy, Chinese bonds? You have like higher yields in the U.S. and all that kind of stuff. I mean, unless you have like some strong currency view. But even if you have strong currency views, you can buy euros, you can buy pounds, whatever. There are all these much more liquid and safer options than the Chinese government, which in 2015 literally prevented foreign portfolio investors from withdrawing money. They just say, no, you can't do that. And that, I think people would do well to remember that. I mean, for diversification's sake, I think some sovereign wealth funds will still, buy some Chinese government bonds and stuff like that. But yeah, this whole notion that you're going to see a bunch of Western pension funds and endowments jumping into Chinese fixed assets, I think is, for now, we're not going to see that. Maybe one day, if the Fed were to cut rates back to zero, China is still positive, maybe, but that's going to be quite some time.
And as Xi looks to, sort of now that he's consolidated power and looks for ways to grow the Chinese economy to achieve his goals, do you see him pursuing this yuan-denominated world, this bifurcated world where, oil and other assets are denominated in yuan as a way forward?
There's a lot of talk, and the central bank, including many of my friends, they continue to pursue this objective of renminbi internationalization.
Mm.
The problem they run into is this, right? So let's say the Russians say, "Oh, great, just pay us in renminbi. We'll take your renminbi," right? So these Russian officials and oligarchs, they take billions and billions in renminbi, but at the end of the day, they still need to buy their yachts. They still want to, through a whole bunch of shell companies, buy their villas in Italy and whatnot. So then they have to take the renminbi to Hong Kong and exchange that into US dollars or euro, and that will put downward pressure in the renminbi in Hong Kong. So then the People's Bank of China will have to decide whether or not they spend the foreign exchange reserve to uphold the exchange rate or they devalue, right? And neither is good. So that's why everyone knows that the amount of renminbi liquidity outside of China has to be limited. People in the central bank, they know that. And that's why they jawbone a lot about renminbi internationalization, but the reality is that it's just incredibly hard to achieve.
Mm. If you looking at based on what we know now, what comes to mind as we're thinking about what this next 5 years is going to look like for China?
I think, so the currency thing, I think, is a big unknown. Who knows, right? It really depends on the Fed, depends on market sentiment, a lot of different factors. But the economy, I think they can achieve, positive growth just through state investment. At the very extreme, and this one thing that they're doing now is that they're paying local governments to buy empty apartments that they've built. And it's crazy, right? So it's like the central bank is expanding its balance sheets, well, very indirectly, right? So they'll lend money to commercial banks or like do these swaps with commercial banks. Commercial banks then lend a lot of money to local governments and they buy up empty apartments. It's basically monetary policy to buy empty apartments. They're doing that. And in the next 2-3 years, that can sustain growth. I mean, it is a crazy thing to say, but it's, as Keynes said, if you dig a hole and fill it again, that's economic activities. It's true. In this case, you continue to have this problem where, nominal rates are positive, very much in positive territory in China. And in the meantime, more and more debtors have no cash flows, because they sit on just bad assets. And so the Ponzi characteristic of the economy just gets worse and worse. The amount of new lending that goes toward rolling over existing debt takes up more and more of it. Is there a limit to that? I mean, the world has never seen this level of just extend and pretend. How far can China kick the can down the road? I mean, in the hedge fund world, we try to make a bet on that. I've learned not to make bets on the exact timing because that's just, not very smart. At least for me, I'm not smart enough to do that. Other people are smarter than me. It's hard to say, but you can see the dynamic is just not moving in a good direction. And that it's extremely difficult for China to get out of it without some kind of big disruption down the road. It could be 3 years from now, it could be 10 years from now, who knows, right?
And of course, that has huge implications for all of us because of China's role in the global economy.
Yeah, no, it has huge implications. Although at first it's actually kind of good, massive devaluation, because as you know, China makes a lot of intermediate goods that go in parts that go into stuff that we make, that Europe makes. Prices of that will collapse and then cost basis will be lower. But then that's like massively exporting deflation, which we do need at this moment. So actually it's not so bad.
Victor, thank you so much. This is an amazing conversation and certainly given us a lot to think about as we watch Xi kick off this groundbreaking third term. So thank you so much.
Great. Thank you.
My takeaway after talking to Victor is that Xi's third term is going to mean a more isolated China than we've seen in generations. Concentrated central control, lockdowns, and intense surveillance will continue. Will China be able to jumpstart its economy? The professor thinks they can get to positive growth. He points out that China is still an industrial powerhouse and huge exporter. And Xi kicked off the party Congress talking about information technology, artificial intelligence, and new energy as engines of future growth. That likely means billions of research dollars will be funneled into these areas, which may help produce innovative breakthroughs. But, and there's a big but, Victor thinks the Ponzi-like characteristics of the economy are getting worse and can't continue indefinitely. Too many people are still being paid to buy bad assets. Local governments are increasingly short of funds, and it's not clear the central government is willing to pick up this tab. This tension is something you'll remember that George Magnus also pointed to. Disillusioned with the pivot to the state-controlled economy, capital is flowing out of China. Higher U.S. rates have only served to intensify the outflows. All of this puts pressure on authorities to devalue, but Victor says a clean float of the yuan is unlikely. For now, Victor believes Xi and his newly chosen Politburo and Standing Committee will extend and pretend. How long that can last is unclear.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.